Galaxy Digital has made a major play in Solana, buying 1.2 million SOL, about $306 million worth, in just one day. Over the past 5 days, the firm's total Solana holdings grew to 6.5 million SOL, adding up to roughly $1.55 billion in acquisitions. These purchases were done via OTC deals or direct wallet transfers, likely to avoid driving up price with big orders on public exchanges. This move raises the question, why is Galaxy building such a large position in SOL right now? One reason is institutional confidence. Solana has demonstrated high throughput, fast confirmation times, and relatively low fees, all attractive for large-scale DeFi, NFT, and Web3 infrastructure growth. For investors used to volatility, SOL offers performance distinctions that can't be ignored. Galaxy's strategy appears to be accumulation rather than flipping. Buying over multiple days, using OTC and wallet transfers, points to stealth accumulation. This kind of buying pressure tends to improve market sentiment even before the wider market catches on, because whales' behavior is often a leading signal. These large purchases can also tighten supply in the medium term. When big holders accumulate and hold, especially off exchange, it reduces the available float, which can create price support. Of course, this depends on how many of the coins are locked, staked, or simply moved to cold storage. There are risks. Solana has had outages in the past, and its rapid growth has sometimes come with concerns around decentralization and validator health. If regulatory headwinds or macro shocks arrive, even big buys might not protect against downside. Also, high cost of entry for large investors creates exposure. If SOL falls, large holders suffer. It's also possible Galaxy may use some of these SOL holdings for staking or other yield-bearing strategies. If staking is enabled, tokens that were just held could start producing yields, further amplifying financial return. But whether Galaxy will stake, or how much, is not yet verified. From a market perspective, these purchases often serve as signals. Traders, developers, and smaller investors tend to take notice when institutions make big allocations. That can trigger secondary effects, increased media coverage, developer interest, partner relationships, and often stronger investor perception of credibility. Looking at history, similar large bets on SOL or on layer 1s have preceded major rallies, though not always. Sometimes markets overreact, but consistent accumulation, when done with patience, has been a common feature of long-term growth trajectories in crypto assets. What should you watch going forward? First, on-chain flow of SOL. Are more tokens being moved into cold storage or staking contracts rather than exchanged? Second, price behavior around resistance levels. Third, announcements of institutional partners or new staking opportunities. Fourth, macroeconomic environment, especially rates, regulation, and liquidity. Galaxy Digital's $306 million buy is more than just a headline, it's a signal. It suggests institutions are increasing conviction in Solana, not just as a speculative asset but as infrastructure. It's a vote of confidence in Layer 1 innovation, speed, and scalability. Whether that conviction holds will depend on how SOL performs under pressure, and how well Solana's network keeps delivering. For more insights on Solana, institutional adoption, and the future of Layer 1 blockchains, remember to like, subscribe, and keep learning, here at Blockchain Reaction.